So installment agreements. This is from the IRS People First Initiative statement that was issued by the IRS on Wednesday, around 11 a.m. I think it was. So this is about 48 hours old. So for existing installment agreements, the IRS is going to allow taxpayers to suspend payments during the same time frame as the filing and payment extension for 2019 returns. So payments are suspended through July 15th. Taxpayers who are currently unable to comply with the terms of an installment agreement, including direct debit, may suspend payments during this period. And the IRS will not issue termination notices during this period. However, do bear in mind that, as always, just like any other time during a installment agreement, penalties and interest will accrue on unpaid balances. Now, for new installment agreements, the IRS obviously wants people to, pay their taxes and resolve liabilities as quickly as they can. However, as we're going to discuss, there may be some difficulties in establishing those new installment agreements. So, why all this talk about installment agreements? Why should you care about installment agreements? Well, if you do a high volume of tax resolution work, roughly 3/4 of all business and individual tax debtors that you come across, the resolution will be an installment agreement. Tax resolution is about setting up payment plans. Tax resolution, the bulk of the work, it's not about setting up offers and compromise. That is not what this business is about. That is not what the majority of your engagements will result in. So because this is your predominant resolution pathway, as a practitioner, you need to be aware of the installment agreement options that are out there and how IRS policy and procedure changes during this pandemic are altering your existing installment agreements and your access to setting up new installment agreements. Okay, so what can you do? I try to be the guy that provides you with actionable, practical, pragmatic, go do this type information. Okay, so here it is. First of all, your past clients that you have set up on a installment agreement, you should be very proactive in communicating with your clients. Notify all of your past tax res clients about this payment holiday. This is, when it comes to collection matters, this doesn't get nearly as much media attention as things like the stimulus checks and the extension of the April 15th deadline, right? Those are like the big headline things we're seeing in the media. The extension of time to pay on an existing installment agreement, you're probably not going to hear about that in the mainstream media. It's only going to be covered really within the accounting media, so people aren't going to hear about it. But there are millions and millions of people millions of people that are on an installment agreement right now that they need this information. So where are they going to get it? They're going to get it from you, okay? And they're going to appreciate you for that, okay? So +1 for you, be the hero to your client. The proverbial always be a marketer, always be looking for the revenue opportunity guy that's, inherently part of my brain, tells me that I need to tell you that this is the opportunity for you to offer these clients monitoring service. We don't have time to go into what that is. You can visit taxresolutionacademy.com / I think it's courses or products or something, and you can see the account monitoring service course there. And I write about it on the blog. I've talked about it in other webinars. But this is the time to offer that service for the clients that need it. Not everybody needs it. In fact, the majority of clients do not need it. But for some of your clients with more complicated business processes or more complicated individual situations, the monitoring service could be of significant benefit to them. So this is a good time for you to incorporate that marketing message within a client service communication. For your current and pending resolution clients, meaning for clients that you have that you're working with right now, or people that are in your prospect pipeline, okay? You should be communicating to them through social media, through email follow-ups, through your direct mail promotions, etc., that right now is the time to get into an installment agreement. Okay, it is a really, really, really good time to be doing that. For one, the payments on those are currently suspended. Okay, and while there may be difficulty in getting an IA set up because ACS is closed as of right now, the online payment agreement OPA tool is still available if they meet the eligibility criteria for a guaranteed or streamline IA, Dan, are the expanded IA criteria included in the OPA?
I believe so. I forget what yeah.
Are they?
No,
Okay. No?
no, actually, I'll take a look at that and see.
Okay, yeah, if you could take a look. So I think it's not, but I can't remember. Again, this is frazzled brain. So use the OPA tool. I know for a fact that guaranteed and streamlined criteria are eligible for the OPA, so use it. Also understand that even with the semi-cessation of IRS collections activity, revenue officers in the field are still working. They are not making site visits, obviously, because of social distancing. They are not out there verifying business assets, which is one of the requirements for setting up a business installment agreement. And so there may be a slowdown in setting up business IAs, okay? But understand that every revenue officer in the field, all 12, 13,000 of them, they all have a government issued cell phone. I hope to goodness that you obtained their cell phone number when you did your initial RO contact and that you can reach them on that number. They are still working. They are still working their case inventories. There has been a reprioritization of cases, and we'll discuss a little bit of that here in a minute. But they are still working cases. They can still access the IRS computer systems to set up the installment agreements and other resolutions, give you a collections hold that may even go beyond July 15th, okay? Especially for your business clients that are obviously impacted by the basically general cessation of economic activity across the country. But again, those revenue officers, they're still out there on the clock, okay? So be aware of that. On the offer in compromise side of things, the IRS is suspending a lot of things in relation to the OIC world. So depending on the stage of the OIC process that they're in, this may impact you. To be completely honest, because so few people qualify for an offer in compromise, because so few resolutions are actually done through the offer program, quite frankly, this won't matter to a lot of your clients, okay? But for those that it does matter to, or for those people that suddenly are becoming eligible for offers, and we'll talk about that here in a second, then this will be important to them. So if you have a pending offer in compromise application and there is an outstanding request from the process examiner or the offer examiner for additional information on the case, the IRS is using the what has now kind of become the go-to July 15th date for a lot of things. They're using that for response deadlines to information requests in relation to an existing OIC application, okay? So you get time. You know, a lot of those things come with a 30-day deadline, and now that's being pushed out. You're getting almost 4 months for those active cases, okay? The IRS is also not going to close any pending offer and compromise application between now and July 15th, unless the taxpayer tells the IRS to close it out. Okay? Taxpayers that have an existing, accepted offer in compromise, they have the option, just like on the installment agreement side, to suspend payments on an offer in compromise until July 15th. Okay? Most of the time, if you're on an accepted installment or offer in compromise program and you miss a payment, you blow up the offer in compromise and the forgiven tax debt is reinstated in full. Okay, but this is a payment holiday basically across the board in regards to IRS collections. And so those existing OIC payments, your 5-month quote unquote lump sum cash offer OIC may now become a 9-month lump sum cash offer in compromise. Okay. Also, the IRS is kind of setting aside the 6-year return rule, as well as the 5-year probation rule on return filing for offers in compromise. So the IRS is not going to place an offer in default for those taxpayers that are delinquent on their 2019 return, but they're taking it a step further and extending that even to a taxpayer's 2018 return. So there's a lot of people that are within that 5-year probationary status on an accepted offer in compromise. Their 2018 return was properly extended through October 15th, but what do you know, they still haven't filed it from October 15th, 2019, when it should have been filed. The IRS is going to look the other way on that, okay? And as long as both the 2018 and 2019 return are in by July 15th, or on the 2019 return, you have a properly filed, I can never remember the form number, 4868, is that what it is, Dan?
Yeah, for extensions, yeah.
Yeah, I don't do tax returns, obviously. So as long as you have a 4868 for 2019 extending to October 15th, you're good on the 19 return, but they're also going to look the other way on the 2018 return, which for some of your accepted offers in the past is a blessing, because there might be, at least a few hundred, if not a couple thousand people out there that are on the 5-year probation window, and they forgot to file their 2018 return. This is not going to blow up their offer and reinstate their tax debt. So this is a good thing, okay? So by the way, these are all things that you can and should be communicating to your clients. Communication. That is the number one thing I want to stress. People are freaking out right now. And I obviously need to close that. And so the communication is the number one tool that you have at your disposal to ease client fears, retain clients, bring on new clients, convert prospects to paying clients, etc. So communicate. New OIC applications, from the best I can tell, both the Holtzville OIC unit, so Holtzville is probably at reduced staffing because of the influx of coronavirus cases in the state of New York. The Memphis and Texas OIC processing offices do not appear to be as impacted by the shelter in place, don't go to work kind of governor mandates. So OIC processing is still taking place. But again, Holtzville might be the one location where that is slowing down to a crawl. But if your client is assigned to an offer or process examiner in Houston or Memphis, things are probably clicking along just as normal, okay? And so those new OIC applications are still being processed. So why should you care about offers? For the most part, you shouldn't. This is a thing that I say repeatedly over and over and over again until I'm blue in the face. Every year, less than 25,000 or so out of the 7 or 8 million resolved collections cases are resolved through the offer and compromise. Less than 1/3 of 1%. So it's the least important tool in your toolbox. However, I would anticipate that this number will increase this year in terms of the number of people that are eligible for an offer and compromise, even if the IRS has a limited processing capacity and they don't get to all of them this year, okay? Remember that when a person is broke, they have no assets to their name, and they have no job, that's the best time to apply for an offer and compromise, because that's when they're eligible, all right? So what you can do, here is the takeaway from this. For your existing resolution clients that were either looking at, maybe they were kind of borderline on an installment agreement, or more likely they were a partial pay installment agreement candidate, and now with their income, their revenue is going to decrease. Ding, 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 ding. Rerun the numbers and see if they may actually be eligible for an offer and compromise. Okay. Be proactive. Again, communicate, communicate, communicate. Be proactive with your clients. Ask them about their employment status. Ask them about the stability of their employment. Ask them about the stability of their business revenue. Remember, under the IRS Financial Analysis Handbook in the IRM, the IRS must take into consideration a recent change in the financial status of a taxpayer in resolving their tax liability. The IRS is not allowed, by their own rules, to ignore a change in financial status, okay? And that goes both ways, by the way, both on the downside and the upside. But the majority of your clients are probably looking at the downside right now. So a change in the financial status may flip somebody from being, an IA into CNC or OIC eligible. And I always say that if somebody is eligible for either OIC, PPIA, or CNC, check the numbers and see if over the course of the statute or over the course of an OIC payment period, if one of the other three is a better deal. So again, that's OIC, PPIA, and CNC. Always bounce the case off each of those three options, and because one might be a better deal based on the individual facts and circumstances of that particular case. All right. And before I forget, because I know I'm going to, let me put up the next polling question. Dan, any oh wait, no. I have to read this one. So
Okay,
with
sure.
hand sanitizer in short supply, what are you using instead? Soap, vodka, battery acid, nail polish remover, or hey, just use some Hudson River water because that stuff will kill anything. Too soon?
Yeah, I guess that's true.
Is that too soon? Sorry,
No,
sorry, New
first to
Yorkers.
answer your question, the online payment agreement tool is only up to $50,000.
50, okay. So expanded IA, no go.
Correct. So that just is streamlined and below. And, in regards to a lot of these, I mean, I guess my opinion is I could definitely see over the remainder of this year, probably even early into next year, that, the ratio of filings of offer and compromise, currently non-collectible, and installment agreement are going to, go away from the norm of what we normally talk about. Because I agree with, the 75% of cases in installment agreement. So I think that that we'll see some changing in the environment. But again, if you're doing an offer and compromise, make sure that your client actually qualifies for it. Don't just file it to file it. The rules are still going to apply. It's just they've relaxed some things over the next 3 months. and a lot of the things that I'm talking to my clients, even though the deadline has been extended and the payment has been extended, you're still going to have to pay the piper at some point in time.
Correct.
So, just be careful and some of the things that you advise in regards to that.
Agreed. Like you said, the historic was 75, 15, 10, 1. Yes, I know
Right.
that does not add up to 100%.
Right.
That ratio, 75% installment agreements, 15% CNC, 10% lien work, less than 1% offer and compromise. Those ratios are going to shift. We're going to see an uptick in OIC and CNC. The IRS is probably going to get overloaded with OIC applications. Historically, we don't see very many of the offer and compromises that are, if an OIC is outstanding for 24 months or longer, it is automatically accepted, even if it hasn't been properly processed.
Right.
We're going to
that's by
see
code.
more of it's by code. So we're going to see more of those 24-month offer acceptances.
I could see that.
I mean, granted, now we're talking out to, what is it,
2022.
But you know what? If your client might be eligible and you can slip one under the radar, then whoop, get that thing in. All right. So non-filers, the IRS reminds people who have not filed their return for tax years 2019 and before that they should file their dinks. The IRS estimates that more than 1 million households haven't filed a tax return within the last 3 years that are actually owed refunds. The July 15th extension is for 2019 returns only. The 3-year statute of limitations on filing a claim for credit or refund still applies. So 2017 returns, 2018 returns, that 3-year statute clock on the 2017s, it still expires April 15th. Did I get that right? Or is it
No, it's 2016 returns.
2016. Sorry. I can't even do math today. Good grief.
That's okay.
So the April 15th deadline for filing a refund claim on a 2016 return still stands. Okay, that has not been extended. So is there a marketing opportunity? Yes. Is there a communication opportunity? Yes. Is that message within the mainstream media probably going to be lost amongst everything else going on? Probably. All right. So clients that you had, say 2013, 14, 15, it might be worth going through your old files, looking those clients up that didn't come back to you in 2016 for their 2016 return and say, hey, did you file your 2016 return? If not, you might lose out on a refund. Okay. 1 million people might miss out. And the IRS will happily keep that money, by the way. I do appreciate the fact that the IRS included this little sentence. Many should consider contacting a tax professional to consider various available options, since the time to receive such refunds is limited by statute. So thank you for that. It would have been helpful if they had linked to the PTIN listing, but whatever. Once delinquent returns have been filed, taxpayers with a tax liability should consider taking the opportunity to resolve any outstanding liabilities by entering into a payment plan or offer with the IRS. So the IRS is communicating to people, again, marketing hat on, I would lift that verbiage, include the citation, the IR dash whatever the news item was. I'd lift that straight up and use it in marketing. Okay. Delinquent returns. Why should you care? The big thing that's going to be on people's minds, besides their 2016 refund, is this: the stimulus checks that are probably going to be issued. Again, it's not yet signed into law, probably tomorrow, but the stimulus checks are based on either 2019 or 2018 income, direct deposit information, and mailing address. Okay, so they need to file those returns or file I don't know the form number off the top of my head, but the form number to change their address.
8822.
8822, thank you. And there is also a way, if a taxpayer has a personal, individual IRS.gov account, they can update direct deposit information. But I think that the return information is much more accurate and timely. Also, from a resolution perspective, in order to obtain an installment agreement or an offering compromise, the taxpayer has to be current and compliant. I'm not on camera, but I'm gonna do the dance. Current and compliant, current and compliant, current and compliant. And by the way, I promise, I really was joking about the cocaine earlier. Caffeine, Red Bull, that's another story. All right, so I'm gonna do an entire CPE webinar, and I'm just gonna call it cocaine jokes. Does that offend you as a Floridian, Dan?
Yeah, it's part of culture. Obviously, if you were talking about marijuana, that's obviously more accepted nowadays.
Oh, there we go. Yeah. By the way, people in some states are starting to hoard weed. I just read that this morning.
I read that a few days ago. Yeah.
Oh boy. So what you can do with this information, help people get into compliance. Everybody wants free money. Okay. I'm willing to bet that the vast majority of us in the accounting, tax, and legal profession, we ain't getting checks. Okay, I know I'm not. Most of us, our income is too high. But for your clients that are below the income threshold, them in particular, you got to get that 2018 and 2019 return filed. Okay, and don't forget, please, 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 don't forget that there's extra money for the child. There are, I don't know how many millions of people out there that are low income. They don't make enough money to even file a return if they make any money at all. They may be living with relatives. They may not be making any money. They may have no income, no job. But they may have a child or two or three that they're taking care of. Guess what? They're eligible for those stimulus checks, but because they don't have a filing requirement and they don't even file in order to get back withholding, there's hundreds of thousands of people that that aren't aware of the earned income tax credit, and so they don't even file to get that. Those folks are out there. If you have those people in your client base, or if they have children that might be in that situation, communicate this to them. Their adult children that are like living in their basement that don't have a job, they may be eligible for the stimulus checks, and the IRS doesn't know they exist. Okay, and so filing a zero return is how you get into the system, so that you can get that stimulus check, because everybody likes free money. Time is your number one friend. For those of you that have done any level of tax resolution work, you know that time is critical, and the IRS has just handed us time. Okay, so a little bit more about that.
Hey, Jason, let me add something real quick. One of our members actually, in regards to dealing with these returns, the process that he's actually taken in dealing with his particular clients is dealing with people who he knows are going to have refunds just to get that money in their hands. People who have statutes expiring, like the 2016 returns, especially if they're due refunds. And then you've got the people who haven't filed a 2018 or 2019 return. I've had a few calls on those as well. On top of that, keep in mind too that for people to go to the SBA, to go to the state and get some of these loan monies. I had one guy called that he hasn't filed a return in like 4 or 5 years, and to get the loan grant monies, he's got to give them the last 2 years worth of returns. So, keep a list in terms of a priority and how you're processing the returns. Make sure you communicate with your clients in terms of that. But keep in mind.
You're saying do those returns first, is what you're saying.
Yeah, do the returns that have the pressing need. Obviously, make sure you're getting paid for all of this, and then just to put out there too, again, just to reiterate, 2016 returns are due to be filed by April 15th. I'm the actually chair of the Fed Tax Committee of the Florida Institute of CPAs, and we're putting a letter together to the IRS that hopefully will go out today to the IRS and to the Treasury Secretary to get some further clarification on things. But as of right now, the deadline is the deadline of April 15th for the refund statute. So if that period goes by, you know, until now the IRS has the authority to extend that. But you know, we're putting a letter to get some further clarification on things like that. So please, you know, please be aware of all of these things. And I'm going to say this again later, but for me, April 15th is still the deadline as far as I'm handling things.
That's good info. So you're dropping the hammer on clients that really don't have much of a reason to extend.
Correct.
Okay. All right, let's talk about the big bad wolf. Actually, let me do a polling question, and then I'll talk about the big bad wolf, enforced collections. Where is my mouse? Where'd my mouse go?
And I'm getting some people are posting that the House passed the bill via voice vote just recently.
Oh, so while we've been on the webinar, the CARES Act has passed?
Apparently.
Okay. Well, I will take your word for it. And so it should go to the president's desk. He was planning on doing a signing ceremony tomorrow, which is stupid. They should do it today, but anyway. Polling question is up on the screen. What is your top concern in relation to what we're talking about? Not being able to reach the IRS. I was expecting that one to kind of be the winner. 50% of you are saying not being able to reach the IRS. We're going to talk about that here in a second, so hold on. For those of you that have questions about what's open, what's not, we're going to talk about that. Figuring out how to get paid is the second biggest concern, 19%. Getting returns filed for people to get stimulus money. Actions to protect CSEDs, ASEDs, we're going to talk about that here in a second.
Let me also answer a question here Erica asked about the elderly clients that don't need to file. From what I've heard, that if they are receiving Social Security benefits and they don't need to file, they will still get checks. I did see it posted somewhere where somebody asked, well, what if they didn't file and they just had unemployment income and didn't need to? I don't think that person would get a check if they would need to file a return in order to have that.
That is my understanding as well. But again, this is all evolving, right? If they were smart, then the states would collude with the Treasury to forward unemployment information, but who knows if that'll happen. Let's talk about enforced collections, the big bad wolf. So liens, levies, and seizures initiated by revenue officers out in the field are suspended. So if your client is worried about, you know, a paycheck being garnished, their Social Security being garnished, their, you know, anything like their bank account being levied, you know, property being seized, etc., those are all being suspended. I have not been able to find information about judicial seizures where it's already under court order and it's already in progress. I have not been able to locate any information on the Department of Justice side of things. I would anticipate, hopefully, that they are following other government branch actions in that. But as soon as I hear something from the DOJ side of IRS seizures, I'll let you know. Or if anybody has information, let me know as well. Revenue officers will continue to pursue certain cases. Of particular note is the recent re-emphasis on high-income non-filers. So I think this is more of a PR stunt than anything else, but we will continue to monitor this. So if you have high-income clients, Basically anybody that's a six-figure earner and above, they are still very much on the radar, including for levy action. Okay. Under the stimulus bill, I believe that the threshold was, oh boy, I believe it was $75,000 as the start of the phase out for the stimulus checks. And I believe it's phased out entirely at like 99,000.
99,000, yeah.
Okay, and then for a married couple, is it doubled to 198?
Correct.
Okay. So for your clients earning more than that, that's probably going to be the same threshold that the revenue officers in the field are going to apply for the issuance of levies. Okay, that's an assumption on my part, but I think it's a safe assumption. Levies and liens that come out of ACS. ACS is, as of a couple of days ago, they're closed. So Campus Collections is not in operation. Those people are being told to stay home. And this has to do with the state shelter-in-place mandates in California, Ohio, New York, and other states. So new automatic and systemic liens and levies are not going to be issued. So those CP notices are not going out. And I didn't have time to add this to the presentation, but for those of you that have sat through my introduction, my sweeping overview class, or the notice cycle class, or attended one of our fast start boot camps, which we're going to be doing online now, of course, you've probably seen my little graphic with the IRS collections notice cycle, bill 1, bill 2, lien, first notice of intent to levy, second, final notice of intent to levy, that circle of life of collections. And what I always say is that breaking that cycle is the key to resolution, because breaking that cycle and exercising your taxpayers' rights to break that cycle is where you buy yourself the time to fix the client in order to get the resolution. Okay. What the IRS is giving us by not filing lien and levy notices is they are giving us a de facto break in that cycle. All right. And you need to use that time to the benefit of your client. And we'll talk about a little bit more about that in a second. But the cycle is being broken for you systemically. Basically, the computers have been turned off and they've been told, don't issue liens, don't issue levies for cases that are in ACS. Okay. See previous paragraph for revenue officer assigned cases. Passport decertification has been suspended for now, and the PCA program has also been temporarily suspended. You can probably expect the private collection agencies to work their existing inventory of delinquent tax accounts, but no new accounts will be forwarded to the PCAs for the time being. Thank freaking goodness. That's a program that should just die a horrible death. Why you should care? Again, time is your most crucial asset in a collections case. The IRS just handed you time on a silver platter. Tax debtors that fail to take advantage of this reprieve, quite frankly, and not pulling any punches, those are the people that are probably beyond help. And we all know that there are clients out there that are in that category. Thankfully, they're few and far between. But if they don't recognize the value of this reprieve from liens and levies that has been handed to them, you're going to have to explain it to them, obviously, because the mass media is not going to communicate that because of other things they're discussing. But if they're not willing to accept that, then they're probably not people you want as clients anyway. So what do you need this time for? Why am I hammering this home? Why am I writing emails about this? Why did I get allowed to butt into Nate Haggerty's webinar the other day and say the same thing? It's because it's important, okay? Time. You need time to prepare those delinquent returns. You need time to make any adjustments to personal living expenses to get people within the collection financial standards. okay, the national and local standards. You need time to do expense reduction consulting. If possible, it might be kind of hard right now, but increasing income and revenue, helping people pick up side hustles and things like that. Or you need an extra few days to put together the financial package and rerun the numbers so you can see if they're eligible for an alternate resolution pathway, like I talked about earlier, such as CNC, OIC, PPIA. Always bounce those three off each other. Okay. The transcript delivery service, TDS, within eServices is still operational. Okay. The CAF unit is still operational. They're at about 50% capacity right now because they have people staying home to quarantine or because of shelter-in-place requirements by the state. But half the CAF unit is still operating. Your power of attorney will eventually be processed. I would set an expectation of probably 2 weeks at this point if it's a new POA. But once it's posted, you can pull those transcripts, do your transcript analysis all through TDS. Revenue officers, if a case has been assigned to a revenue officer, they're still working, okay? Get their cell number. Hopefully you already have that. Discuss the case with the IRO. Don't let those languish. As of today, as of this recording, ACS is closed, so you're not going to get anywhere there. But once they reopen, I'm sure it'll be in a limited capacity within a week or two. The call times are going to be absolutely horrendous, but work with what you have, okay? You need time to verify accuracy of liability. Again, that's transcript analysis. And then originally in the slide, I had a much less politically correct way of phrasing this, because there's a phrase I always want to use that I have to stop myself because I'm supposed to be professional. But you have to unscrew the client, okay? They got themselves into a position, and fixing that root cause problem, it takes time. Nobody can change their behavior overnight, all right? So again, time. I cannot overemphasize the importance of time and having time on your side. I knew I should have made this a 2-hour webinar. Other matters. So appeals, they are still working. Historically, appeals does most of their conferences via telephone anyway. I don't know about the rest of you, but I started in this business in 2008, and during the years I was in practice, 08 to 15, I never once had a single face-to-face appeals conference. Never happened. Never, ever. They were all conducted by telephone. A little over 200 of them during my years in practice, all conducted by telephone, every single one of them. And so there's basically been no change in this protocol. Statute of limitations issues. And Dan, I'm sure since you're our resident ASED CSED expert, I'm sure you have something to say about this. But the current collection kind of suspension is administrative. It is a courtesy. It is not statutory or anything. This is not a tolling event, okay? So your CSED clock is still ticking. Your ASED clocks are still ticking on all tax matters. And so because of that, the IRS has said that if they determine it to be necessary, they will protect statutes. Meaning that they will still file liens, they will file judicial actions in order to protect statutes. Now, fortunately, the IRS only files a few hundred of those per year with the Department of Justice to start reducing those to judgment. It's a very, very non-issue. But if you have a client in that situation, they have a statute expiring within the next couple of months, and they have, flaunted things in the face of the IRS, they have a very egregious compliance history, do note that the IRS may take court action in those situations. The IRS will still issue notices of deficiency. The IRS is required by law to issue a statutory notice of deficiency. Okay, those must go out, and they will continue to do so in cases where it arises. The last sentence here that was in the People First Initiative announcement on Wednesday, where a statutory period is not set to expire during the 2020 year, the IRS is unlikely to pursue the foregoing actions until at least July 15th. All right, so basically, hint, hint, wink, wink, nudge, nudge, they're not going to turn anything over to the Department of Justice on a CSED situation until after July 15th. That's what I'm reading into that. This is an opportunity for you to be a hero to your clients. This is a time to help businesses apply for those SBA emergency loans. This is the time to help individuals with unemployment applications. And like Dan said, those applications may require filed returns. They're going to need updated financial statements for those of you that are CPAs and can prepare those. They're going to need those. And I messed up the bill number here. I think you said it was 748. I think it transposed that.
Yeah, it's 748. Yeah.
So if the House has passed that while we've been talking here on this webinar, then I'm sure it has not yet been signed by El Presidente. That is, I believe, supposed to take place tomorrow. And one of the most interesting provisions in that, to me, is actually the expansion of unemployment insurance to self-employed people. So all your clients that are gig economy workers or freelancers, etc., you know, the folks we know as Schedule C people, for the first time ever, the Congress is appropriating a ton of money. I don't know the exact figure. I just know it's a ton of money to, in addition to the normal amount that they were considering, they increased the amount to cover these gig workers. All right. So don't neglect being a hero to your Schedule C peeps. Be aware of what community resources you can connect your clients to. For example, here in my local area, I'm isolating right now at my home in the Puget Sound area, and there's a lot of businesses around here that are encouraging their customers to buy gift certificates from restaurants in order to help them stay afloat. A lot of the radio stations around here are posting takeout menus. So think about these things. What can you do? Can you arrange any special deals with some of these takeout places? Can you connect? Can you be a connector of people with a service business that are being impacted? Connect them with other clients that need those services, right? Think outside the box about how you can help your community. Another thing, you know, the VITA program, the AARP tax centers, those are all shut down because of social distancing. So is there a way you can step in? Is there a certain, you know, especially because, hey, your tax season just got extended 3 months. You have the pressure of the filing season, I hope, has mostly diminished because of that for a lot of you. So with that extra time on your hands, can you dedicate some of your time to some pro bono work, right? Can you do some senior tax prep? Can you help some segment of the population, you know, displaced folks that they need the return filed because to get that stimulus money in it? And even if $1,200 doesn't make a hill of beans difference in your finances, it does to a lot of other people. And so can you help them with that, right? And if you're gonna do that, obviously parlay that into a marketing message. You know, what can you connect with the media to say, hey, I'm doing this thing, right? So if your local newspaper, your local radio station, your local TV station is doing similar to what the Seattle radio stations are doing with, hey, let's help small businesses, you need to be participating in that and saying, hey, I'm doing, 50-cent tax prep on 2018 returns for people that didn't file, that need to file a zero return to get their stimulus check or whatever, right? And again, I do want to apologize for sounding frazzled and haggard. I was working on things until about 1 o'clock this morning, and then got up early and was working on this presentation for a couple hours before we started. And just with everything coming in all at once, it's I'm not my normal fun-loving self, probably. Oh, I forgot I had another joke poll. Hey, did you hear the joke about the coronavirus? Yeah, but let's not spread it around.
Yeah, did you hear about the coronavirus joke? They didn't get it. That was one my brother-in-law told me at my daughter's wedding a couple of weeks ago.
Oh, geez. You know what? If you can't laugh while people are dying, then we've lost our humanity.
Yeah, well, at least the one thing that I would say is that this has brought a lot of us together in helping one another, which
Absolutely.
is something that our country's, sorely needed. So I'm thankful at least for that. Jason, you mentioned earlier to me about wanting to talk about some of the mortgage issues. Did you want to talk about that now before?
All right, here's what I'm going to do. Let me jump to
earlier. We're more than likely going to go over because it's at 2 o'clock now. So we've done the 4 polling questions. If you need to go, feel free. But
let me jump to this
stay.
one, okay?
Yeah, we'll stay on. We'll answer questions. There's been a lot of questions that have been out here as well, and as Jason mentioned earlier, there will probably be follow-up webinars in regards to these topics as new information has been released, and probably even further ones in depth of the bills that have been released.
And what's funny is 2 days ago when we announced this webinar, I sent you an email saying, hey, I want you on to provide color commentary because I don't think I can fill an hour on the People First initiative. I guess I was, yeah, anyway. All right, so I'll go back to the marketing stuff here in a minute. I know that people have questions about that, but some resources. This is important. If you are not subscribed to IRS Newswire, IRS Guidewire, and Irs Quick Alerts, then you need to do so. Whenever you see, I've noticed that the National Society of Accountants, the NSA, they are particularly good about this. I think that they have somebody whose entire job is to just watch their email inbox, and as soon as one of these comes in, they fire it back out to the NSA members. So they've been really, really, really good about this. So kudos to them in particular on this. But whenever you see these things, be it from NSA, NATP, NSTP, NAEA, NACTR, wink, wink, nudge, nudge, AICPA, FICPA, CalCPA, blah, 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 blah. This is where they get it, okay? This is the source. And so I believe that all of you should simply be subscribed directly to the source. And if you go to irs.gov/newsroom/e-news subscriptions, you can sign up for Newswire and Guidewire. And then IRS Quick Alerts is located in a different place. This is more, so like the announcement that was issued this morning about practitioner priority service was sent through Quick Alerts, which is actually kind of intended for the tax prep side. Hopefully they'll copy that over to Guidewire, but it might be later this afternoon. So the quick alerts are worth signing up for on their own, and the web address is there on the screen. I have set up a special blog dedicated entirely to this IRS People First initiative. I will again be copying and pasting IRS Guidewire, Newswire, and Quick Alerts info into that. I registered IRSpeopleFirst.com. I registered several other domain names as well to keep them from being, fall into the wrong hands. Mr. Fraudy Fraudster out there, shame on you that wants to take advantage of people. But we saw that a lot with the IRS Fresh Start program back in 2011 and 12. And so I just went ahead and registered those domains right now. One of the things that I'm doing is in relation to the call centers. I am actually tasking one of my virtual assistants with calling the 5 primary IRS hotline numbers twice a day, in the morning and the afternoon, and telling me whether they can get through or not. Okay. And I have posted, I have a blog post at irspeoplefirst.com that I'll keep updated twice a day with the status of those calls. If you want to check for the green and red little text just for fun. On this same note, the IRS issued a quick alert this morning. Thank you, Dan, for telling me about that, because it was buried in my email and I wouldn't have seen it in the frazzle of finishing this presentation. So I appreciate you doing that. But this quick alert said that PPS, eServices Help Desk, Fire and Air are closed. Also, the Income Verification Express service, which is primarily used by lenders, that is closed to new requests. Existing requests are going to be on a delay. That's probably a situation where it's one person left in the basement and everybody else is stuck at home. CAF, the CAF unit is operating. I've seen 2 or 3 different things saying that they're at about 50% staffing right now. Okay, so your normal like 5 business day processing time for an 8821 or a 2848, that's probably going to be closer to the 2-week mark. The business tax line, the 829-4933 number, is open. They are staffed and taking calls. It's about a 30-minute wait time as of yesterday afternoon when I checked it. ACS is closed. The tax exempt and government entity hotline is closed. So if you have nonprofit clients, that can be an issue for them. So I know we're a solid 10-15 minutes over, and we've lost probably
to the people here.
Yeah, we've lost about 30 attendees. So I guess people had appointments or whatnot. So before I flip over to the marketing, there's some very important marketing stuff that we should talk about. But before I do that, do you have any other comments on more the casework side?
Not a whole lot, other than just, obviously keep plugging along as what you've been doing. If you're dealing with a lot of tax resolution cases, just do what you think is the best to try to protect your client. Make sure that they're aware of what their responsibilities are and some of the things that are relaxed. And please note that if they do stop payments for an installment agreement or don't immediately send things for an offer in compromise because they've got more time, in my opinion, unless they're really having financial problems, that shouldn't stop for them. But if they are, then they have at least that luxury to give them some extra cash to be able to do so.
Excellent.
And make sure you make reminders to follow up with them later on it too. So it's just creating more work for you if you do that.
Totally. All right, so I have been bombarded with emails. My apologies for those of you that I have not yet responded to your email. To be honest, I'm probably just going to do an email flush at some point today. I am so drastically behind on email. I doubt that I can catch up. So for those of you asking about the marketing side of this, this is not the time to be a vulture if you have not previously been a vulture. And if you work for or own one of the fly-by-night scumbag rip-off tax resolution firms, then please go away. I don't want to talk to you. I don't want you on my webinars, so leave. But for everybody else, the question of marketing this, especially during a tumultuous economic time, is definitely at the forefront of a lot of people's mind. There will be a surge in tax resolution opportunities. Okay, remember, I started in this industry in January of 2008. I went bankrupt and ended up homeless as a result of the real estate crash that preceded the Great Recession, as they call it. So I have a very strong opinion about the recession-proof nature of doing taxpayer representation, because I lived through it during the worst recession of my life. And so this too shall pass. This too is also an opportunity. Because of the fact that the mainstream media, they're going to be focusing on the stimulus checks and the current year return filing and payment issues. I expect them to pay very little attention to the tax debt world. There is an assumption that people that owe money to the IRS are only either tax cheats or wealthy people that are dodging their responsibilities, or those greedy wealthy business owners. Okay? We obviously all know that couldn't be further from the truth. There are people out there that are going to need help. They already do need help. There are going to be more of them. I have not read it yet this far into it, but I do know that there are payroll tax provisions within the stimulus bill that passed the House today during this webinar, apparently. And so I need to analyze that. That will be a huge factor. From what I believe was that there was a proposal to extend payment of current period payroll tax liabilities, half due by the end of next year and half due by the end of the year after that. And I think that was part of the proposal. So that will create, the majority of tax debt is payroll tax debt. So that creates additional resolution opportunities. Point being, there will be a surge in the business and individual resolution potential. You need to be marketing for these services just like you always should be. Okay, it is year-round. It is not seasonal. On the 941 side, the marketing strategies that I've been talking about for years still apply. If you go to my webinar, my GoToWebinar channel, which the address is there on your screen at the bottom of that, is a replay of the 3 top tax resolution marketing strategies video. If you haven't seen that yet, I recommend that you watch that. The first 2 strategies, mainly referrals from other tax professionals, and I'm not going to regurgitate that hour webinar here of why you should be doing that. Just go watch it. But referrals from other professionals is number 1. Number 2 is establishing yourself as the local expert in this field. Those first 2 strategies are still very key. Now, obviously, you're not going to get together with over coffee or drinks with another CPA, EA, tax attorney, or unenrolled preparer. But instead, use an online tool. Google Hangouts is free. Zoom.us is, I believe you can have your first 40 minutes with up to 3 attendees or something like that on a free account. Join.me is another tool. That's what we use for our sales demos with big firms over at my software company. So all 3 of those are really good tools. With this extended filing and payment season, people are out there searching for information and help, tax debtors included. There is no evidence on this. This is an assumption on my part, but I assume that some of these people that have kind of buried their head in the sand for years, they're going to start coming out of the woodwork. Either because one, they recognize the opportunity to get back into compliance now that can benefit them, or they just want that $1,200, right? So now is the best time ever to be networking with other tax pros to get referrals for resolution work, because very, very, very few other tax professionals do resolution work. And quite frankly, if you are not willing to step up and network with other tax professionals, I don't know what else to tell you, and I can't help you. If you're not willing to just reach out, call, or email a few other, especially unenrolled preparers that can't do resolution work, they're not allowed to. They can't sign the 2848. If you're not willing to do that networking, then you're not going to get very far in tax resolution marketing. I don't say that to be harsh. I just say that to be blunt and realistic. Okay. Also, the media focus on tax and economic matters right now, your local media, they are setting aside airtime and print space to covering this whole issue. This is more of Dan's territory, so I'll let him wax poetic about that. But I think if you're not taking advantage of the quote unquote conversation that's already going on in their head for the prospects out there, then you're doing your business a disservice. Dan, any thoughts on the media side of it?
Well, I mean, for those of you that have any connections to media, newspaper, blogs, podcasts, anything that you can do, even if you have your own, you should be talking about this. Unfortunately, I always say that tax season is also marketing season for many of us. And for those of you that do only tax resolution, it's still the time to do the marketing, because now this is where some of the people come from. And in light of what's going on, as we talked about, with people losing their jobs and I'm sure have tax bills that are coming due or have been due, they're trying to file for loans, you've got extra work that's there, but unfortunately you got to get out there and do this stuff and find the time. And think smartly when it comes to it as well. Repurpose information if you have it. If you created something and put it on your website, post it, and you did that on a page or a blog, send it out in an email, put it together in an article that you can send out a press release. For those of you like me who already have gigs with your local newspaper, I write for the Florida Today is my local papers, part of the USA Today family. And I wrote a Facebook post that I put on my business page today in regards to the stimulus check stuff, with a few other things about the bill that I just copied it and pasted into a Word document that I'll send it, and I added in and edited a little bit. Usually my articles take me about an hour to do, but since I'd already put that together, I repurposed it and reused it. And so just think smartly, and when it comes to the the old mantra, work smarter, not harder. So do anything that you can to make your life easier. So I would generally suggest to get out there. On the early bird gets the worm, so to speak.
Mm-hmm.
So just make sure that you're out there looking at these things and do the best you can in regards to it. I understand it's still tax season. We still need to get the tax returns done. And if you're like me, the deadline is still the deadline. Now, obviously, that's going to be a little relaxed for some people, but I'm still plugging along. We still called people that earlier this week. Hey, are you coming in? You bringing your stuff in? And obviously, we're using a lot of electronic means for doing that. But I would highly suggest that using any kind of media marketing that you can do, especially if you've already done it or you have those connections, continue to do that.
Excellent, thanks. So if you watch my 3 top tax resolution marketing strategies, 1 is referrals, 2 is become the local expert, number 3 is tax lien marketing. And so with the cessation of lien filings by the federal government, there are big tax resolution companies out there that there's several dozen of them actually, that they rely entirely on cold call, hard sell telemarketing floors to sell their services. And there's probably about a 2 to 3 week backlog of lien filings at the county level that will be processed, but after that, their lead flow is going to dry up. And so it's going to destroy companies that rely on tax lien only marketing. And for the big dirtbag companies, I'm perfectly okay with that. I've never pulled any punches for years on that. But for those of you that are reliant on this as well, but do it the right way, it's also going to impact you. Heck, I run a tax lien mailing list, call list service, right? It's going to impact my revenue. So for those of you that are at all in tune with the tax lien marketing, here's some things. If you've relied only on this method, now, unlike ever before, is the time where you need to pay attention to strategy number 1 and strategy number 2. Okay, so get out there, network, get referrals, do speaking, do webinars if you cannot do live stuff. For those of you that have historically done some speaking already, I know we got several people here that do. Here's a pro tip for you. Go to the organizations that you normally would speak to or were scheduled to speak to and say, hey, we can still do this presentation. I have a Zoom account. I will let you use my Zoom account. I will host the session and we'll just do it online. Okay, being the host is always the best position to be in, and you can still do your speaking. For those of you that are that are Tax Resolution Academy members, a couple of days ago, I posted in the Academy under the Tax Resolution Marketing Library a tutorial, a marketing funnel blueprint, and an example PowerPoint for you to do a consumer tax resolution webinar. Okay, it's a very successful strategy. You bring people into the webinar, that's your lead magnet, and then you upsell them. At the end of the webinar, you sell them the investigation of liability and financial analysis process, which is the split sales model. Okay, write a book, write an article, write a blog post, write many emails, write. And then 2 other significant changes in your tax lien marketing. Number 1, don't forget, or I guess don't forget the old tax liens. There are resolution firms out there that get all their clients, all they do is they market to tax liens that are 3, 6, 9, 12 months old. They don't pursue the new liens, which is what the majority of the firms do. Okay, for those people that kind of have their heads somewhat buried in the sand, but they're at least receptive to the message, guess what? This might be the time where they finally decide it's time to resolve things. I typically recommend going back about 6 months because those people have been through the complete IRS collections notice cycle already. So go back, get those 6-month-old tax liens, and do your normal marketing to them. And then throw in the, get your stimulus check marketing message. And then B would be, don't neglect your state tax liens. So my tax lien service, we only do federal. We don't collect state tax liens. But you can get them from you can get state tax liens from your Secretary of State or your county clerk and recorder. I have, different states are doing different things with this. It's impossible for me to cover 55 states and territories on a webinar. So be sure that you're paying attention to what your state is doing. Both AICPA and NSA have compiled very, very, very nice summaries of what each of the states are doing. So I will defer to them on that information, or obviously your State Department of Revenue. But don't neglect those state tax lien filings. They're a good thing to market to. In the slides, I attached a little bonus for you. It's my checklist for closing sales via the split sales model. There's some sample verbiage in there for you to use. It's a horrible name. That's the best I could come up with when I wrote the manual back in 2013. And the split sales model is just so very, very well geared towards running a remote practice, okay? Because whether you want to or not, the reality is you're now a remote practice, a virtual practice, a cloud practice, a digital nomad, whatever you want to call it, okay? And so you can thank the virus for that. And then the virus is going to say, my pleasure. Hey, can you spare a cell for me to multiply in? And then we're going to say, no way, virus, my body, my cells. And then the virus is going to be like, And for the rest of it, you're going to have to watch my one-act play off Broadway, coming nowhere to a place near you. That joke wasn't as funny as I thought it would be. So see the checklist attached for the slides. In your marketing communications, emails, Nate Hagerty talked about this on his webinar the other day. If you saw that. So in your emails, in your newsletter, you have a newsletter, right? You have a newsletter? Yeah, you have a newsletter? Talk about all these things, okay? Talk about that. I really should have just planned this as a 2-hour webinar. It would have been a lot easier. Obviously there's a lot of technical stuff we didn't go into today. Dan and I, we do, usually a couple webinars a week. We're also moving our fast start boot camps. Normally in the past, we've done one every other month, one a month in cities around the country. Obviously we're moving those to an online format. So if you want to delve into the technical side, go to taxresolutionseminars.com. Our event that was scheduled for Phoenix, Arizona on May 6th and 7th, that has been moved online. So again, go to taxresolutionseminars.com for information on that. And if you're not already a Academy member, you are invited to participate in the largest online community of resolution-only entrepreneurs. We provide both business development, practice management, and casework technical guidance through all phases of an engagement. You can find that at taxresolutionacademy.com/join. And so 40 minutes late, that is the end of my slides.
Do you want to spend a few minutes and going back through a few questions that we have here?
Yes.
Because there were some that we really haven't gotten to answer. I think a few of them, and we'll just reiterate just because there are some people that came on a little bit late. Question by Karen, she says, does the taxpayer have to stop payment in regards to an installment agreement? So if they're already in one, especially if it's direct debit, I mean, if it's obviously manual payment, then there's nothing they need to do. Just don't mail their payment in until after July 15th, whenever their next scheduled payment is.
Right, but there's nothing that says they can't make their payment.
Right. And I mean, if the person, there are going to be people who are going to take advantage of it, and because I can, I'm not going to. But all that does is delay the inevitable. Interest still does accrue, to me, I would want to get rid of the debt sooner than later if they are not financially hindered by anything related to the coronavirus. And I've been very fortunate that I don't have a lot of clients that are in that type of situation. Then I would just tell them, I probably wouldn't even tell them anything. If I told them anything, I would just say, hey, just in case you hear this, I would still recommend you make the payments. It's obviously their money, their decision to make, but I think I would go on record as unless you absolutely need to, just continue to make your payments. But what from the direct debit side, if somebody's already set up in one, what do you suggest there?
Well, I mean, you can't call ACS. If it was a revenue officer assigned case, then they already closed it out and they can't reopen it, so that's not an option. So if it's on direct debit, then I don't know. I have not seen any guidance from the IRS saying that they're going to not make those auto drafts. That would be the smart thing for the service to do, is they just don't make the debit. But I have not seen any guidance in regards to that. So my assumption has to be that they will make those auto drafts. But of course, if there's nothing in the bank account on the day that normally happens, then there's nothing for them to grab, right? And the debit will fail.
The thing that I've seen is that there is this spot at, using the online payment area that you can edit certain things there. And if people have their own accounts set up to go into them electronically, that they can, I believe they can edit certain things there.
They can, but the problem is that a surprisingly few number of Americans have their IRS.gov personal account set up.
No, I agree with that. I'm just saying that those are things that you can suggest to them. Obviously, the ones that are not technology savvy, that would be something that you would probably have to do. However, again, remember your time is still worth something. Try not to do too many things for free in regards to this. But from that standpoint, again, as long as you have an existing power of attorney, you can do those things for them. So
Carlos had several questions here about fees. During this time, was the best way to charge, trying to work with people in financial challenges. So I'll let you mostly cover this, Dan, because I know you've done several webinars in the past few weeks on fees and billing. To me, it always comes down to your fee, your payment arrangements should be in line with the type of clientele you're trying to attract. And so if you want to be a hard nose and absolutely do not want to work with people that are losing their jobs, then that's your call. You can totally make that decision. And this is another area where niching is really, really important. And I have a whole lot to say about this always. It's so, niching to the exclusion of certain client groups is so incredibly obvious in other service professions, but for some reason, accountants have a really hard time grasping this. I don't know why. But in every other, white collar professional service industry, it's just taken for granted. It's just the way they do things. So niche. If you want to service people and businesses that are going to be hard hit, then you have no choice. You have to accept creative payment plans for your fee. You may want to do promissory notes. You may want to do some sort of deferred fee arrangement and include a paragraph to that effect in your engagement letter. There's different ways you can do that, but if you want to help those folks, you're most likely going to have to take some sort of fee deferral. Dan?
Yeah, and I just covered this on Monday, and I did a collections webinar and basically how to make sure that you get paid. One of the things that you could look at, and this even came, a few of them came even up after my webinar, because we had this discussion in my office in regards to another guy who needed a couple of returns so that he could go file his SBA stuff, and said, you know, here's my fees. And then, of course, the first thing he actually asked, he trains dogs, and unfortunately, I lost both my dogs here within the last 6 months, so that's not going to work for me in terms of training. Although I've been getting now pressure to get new dogs from in my household now, and I'm just
Yay!
not ready. I'm not ready for that.
I hear you. Totally hear
But
you.
at the same time, you know, another thing that even he suggested is that he does with his clients is using PayPal. PayPal has that 6-month payment feature, and what I told people on the webinar is, don't get hung up on the fees. It is better to get paid, you know, 90, 95, 98% of the fee than to not get paid at all and do work. So my suggestion to people is, you know, whether you do, you know, you take credit or debit cards, you do PayPal, if you know, you could barter, use financing companies. There are multiple ways out there, and you just don't, I mean, ultimately you could do it. Could do a monthly payment plan, installment agreement, a promissory note, like Jason suggested, any number of things. The more that it's on you to collect, the harder it becomes, especially when you've got wounded birds that are going to come into you dealing with tax resolution aspect of things. I mean, I've got one client, you know, last year he made almost $500,000 gross, living in Miami, you know, hardly has any other, you know, major bills, but he can't pay my bill because he sells medical equipment in the healthcare industry, and apparently, you know, his company stopped paying him. And so it's things like that that you want to try to avoid. You know, do monthly payment plans, do weekly payment plans. You know, I mean, even with the credit card industry, you know, you can get credit card payment advances, and they pay, it's horrible interest terms. I mean, it's like, you know, if you really look at it, it's like 24 to 30% interest rates. But, you know, people can take advances on their credit cards, the collections, and come up with extra cash there. Not only that, these are tools that you can use within your practice, but these are also things you can suggest to your clients as well, to help them with their cash flow. So
Agreed. One thing so credit cards are great. One thing that I think we all need to pay attention to, because we all should be taking credit cards, but we also need to be aware, if things get really, really, really bad for the banks, you know, depending on how the economy goes with all this, they may do what they did back in 2008, 2009, and they started reining in people's credit limits or even canceling cards in order to reduce their risk exposure. So I would encourage you to pay attention in the financial media, and specifically be looking for any news items about big banks closing cards or reducing credit limits, because then that will affect cash flow for all small businesses, all of us included. So just another thing for you to worry about.
right, but you know, ultimately, you know, you can make the choice to get paid partial or not at all, depending on the cases. I mean, there are going to be some cases maybe with elderly people that might be caught in a rock and a hard place, you know, with portfolios being, you know, majorly decreased. They're on a fixed income, but, you know, maybe they took a large, you know, sum out of their IRA, which is, you know, I mean, one of the things that was in that bill that just passed was that people can take out $100,000 out of their IRAs and not pay the 10% penalty, which I could
Right.
see a lot of people do. That's
They're still
something
going to have
that
to pay the income tax, though.
yeah, you still have to pay the income tax, and this is part of my article that I'm putting into the paper. that you still got to pay the income tax. You should still take withholding. And most people just take 10%, which usually, I mean, $100,000 jumps people a bracket.
Right.
I mean, that can take you easily from the 12 to 22. That's an extra 10% you're paying right there. So there are going to be people who are going to get caught with not having the money later because they've spent all that $80,000 or $100,000. So, you know, and just be aware, you know, push back on people in terms of both your fees, on making them do more work than you doing work. You know, so because you've got an opportunity cost, and you need to choose between working with you know, people who aren't going to pay you versus people who are, and they're going to pay full freight and pay good rates, especially for tax resolution type cases.
Yeah, you know, the 401k thing, that actually presents a tax planning opportunity for some people. Just like with the market downturn, there's a tax loss harvesting opportunity for some of your clients. So how you play this with your clients really depends on your clientele. And so don't ignore some of the other kind of ancillary opportunities out there. You know, just because I focus on the resolution side, understand there's planning opportunities as well. Let's see. I'm sorry, I'm gonna mispronounce your name, I'm sure. Dianesh. Sorry about that. Says, does the statute of limitations extend on installment plans? This is a very common and important thing. When a taxpayer is on an installment agreement, this is not a tolling event. The CSED clock does not stop. All right, ever. I mean, that's just normal statute.
Well, it does, Jason. There is that 30-day for the
30
pending
day.
status.
Yeah, 30-day. There's a 30-day extension while they're processing the installment agreement. But I'm talking about
While they're in the IA, correct?
Yeah, while they're in an installment agreement, while they're making payments, the CSED does not stop. And the IRS has said that even though they are suspending installment agreement payments during this period, there is no suspension of the CSED. Okay, they are still going to be in an active installment agreement status. Therefore, during this installment agreement and offer agreement payment holiday, there's no change in the CSED status, right? Yeah, that is not an issue. Ted, Irs payments in a Chapter 13 bankruptcy. I don't follow what the bankruptcy courts are doing. Ever. It's not something I pay attention to at all, so I don't know what the bankruptcy courts are doing in regards to Chapter 13 payments every month. But the IRS is subject to whatever the court order is in the Chapter 13 program. And so whatever the BK courts are doing is what the IRS is bound by. So if we have any bankruptcy attorneys, I know we have several that are members. If there's any bankruptcy attorneys, if you've heard anything about what the bankruptcy court guidance is on Chapter 13 monthly payments, please pipe up, let us know. But Ted, that's what you, like if you were going to do a Google search or something, that's what you would look for, is whatever the bankruptcy court in your jurisdiction is. If they're giving a Chapter 13 monthly payment holiday, then great. But I don't know about that. It's again, it's not something I follow. Let's see. You know what? There's enough people commenting about this, Dan, that it seems as though the just overall general internet slowdown, it may have like delayed the pop-up of the polling questions, which is interesting.
No, actually the one that you saw there, I accidentally hit the button replying to somebody and put the show the results on that one polling question.
Oh, okay. All
So
right.
yeah, that's what happened there.
So you're frazzled too. No, I'm just kidding.
Wasn't paying attention.
Um, Claudia wanted to know for potential OIC candidates, what if they have equity in their homes? The IRS law. So the qualification criteria for OICs and CNCs are the same. If they have significant equity in their house, that equity still goes into the equation. The calculation of RCP has not changed in any way, shape, or form. Brian says, "What do you have against New York?" So Brian, I just don't like big cities in general, and so but New York City is the easiest one to pick on because it's huge. But no, I don't like going to big cities in general. I am a Podunkville kind of guy, so I don't like going to New York, Los Angeles, Miami, Houston, Dallas, Chicago. I don't even like going to Denver and Seattle. I just don't like big cities. But when I was looking up the jokes, I did a Google search for the joke, so the joke referenced the Hudson River, and I thought it was funny. So, oh, I'm not repeating that one. Oh, that's horrible. Good one, Ron. Good one. That's good. Let's see. Dan asks, would the OIC be reviewed and have current income reviewed at that time? So if the IRS is way behind on offer and compromise processing, in general, they're supposed to use the financial information that is supplied at the time of submission. According to the IRM Financial Analysis Handbook, they are supposed to request updated financials, a new 433, if the financial information is more than 12 months old. I guarantee you this is going to happen because there's going to be a flood of new offers and compromise. Okay. And they're going to go like OIC processing. Like I will bet Dan Hen like $10,000 that the average OIC processing timeline is going to go past a year. I cannot imagine a world in which that won't happen.
I could see that. I could see that they're just going to get inundated and be in the fact of their technology and the human body resources that they have, because there's still a lot of people retiring from the IRS and they're just not being able to hire as many people, although that could potentially change, in light of everything going on. So, there are, and the people who in the offer and compromise unit, plus, we don't know the, end result of how all of this coronavirus stuff is going to happen, because, there's a lot of people unfortunately dying. There's a lot of people that are going to be, not probably, maybe to become disabled because of it. So there are a number of different things that could happen that could change the whole landscape of it. But it would not surprise me if there's a lot more offers submitted and you'll hear a lot more people getting past the 2 years. Although 2 years is a really long time to wait, but
right. Well, like I said earlier,
happen.
I can only assume that the Holtzville campus is shuttered right now because of Governor Cuomo's shelter-in-place order. I know that in Ohio, so at the Cincinnati campus on the Ohio side of the river, they're similarly affected. On the south side of the river, there's also some IRS, an IRS campus. They, I believe, are still at work. The California centers are obviously closed. I believe that the Houston center is still open. There is no, to my knowledge right now, there is no shelter-in-place order in Utah. So the Ogden campus is open. So these IRS services are impacted by what's going on at the state level. So
Well, I do know that the Fresno appeals office is still working because I got a call from my appeals officer
they're
earlier
working
this
from
week
home.
on
They're
a
working
case.
from home.
Okay.
Yeah, yeah. See, that's one of the benefits of working. If you have a case assigned to a revenue officer or you're in appeals, those people, it's really easy for them to work from home. Okay, and so they are. Let's see. Barbara says, I heard the stimulus checks will be based on the 2018. There were several questions about the stimulus checks. So yeah, it's based on the 2018 return if there is no 2019 return yet filed. If your client did not file a 2018 return for whatever reason, then that should be a high priority filing item so that they can be sure to receive that stimulus money. And again, the mainstream media is going to be talking a ton about that aspect of this legislation. And so they will come crawling out of the woodwork saying, how do I get my check? How do I get my check? How do I get my check? And your answer is going to be file a return, file a return, file a return. And they're going to be free, and you're going to be no. So it's yeah, definitely file that 2018 return. Don't forget, if your client has no filing requirement because they have no income, they're actually, it's my understanding that they're still eligible for the money as long as they have an SSN, not an ITIN. There's a whole other conversation there to be had. But they can file a zero return and get the money. I don't know if there is another avenue. Dan, do you know of another way to, if they're not getting Social Security and they don't have a filing requirement, is there some other way?
The only thing that I've heard so far, I haven't actually seen or read it, but they have to have filed a return in 18 or 19. However, let me add this: if they don't get a check today, and when I say today, that the checks aren't probably at best going to be really being released until
month.
late April,
Yeah.
until probably May. But technically, the way I understand it, these stimulus payments are truly based on 2020 income. So there is the possibility, and I've seen it in a couple of different places, that there will be a truing up next year on 2020 tax returns for those people who didn't get it or didn't get enough, or even possibly that got too much. So just like we do with the premium tax credit, there is a possibility that that could happen. I haven't read the full, bill or seen that in full details, but I've seen it in two different places from two different sources that talked about that it's technically based on 2020 income, even though, we're basing it right now on if you filed a 2018 or 2019 return. So just be aware of that. That's the new thing that, obviously I can't tell you how much I am looking forward to next tax season for filing all these returns that, with the truing up of that, we just got rid of the, healthcare penalty, and we still have the premium tax credit true up, but, and that's been waning because now people aren't, since they don't have to have the insurance because to get the penalty, they're not really getting the insurance at all. But with all these credits, with all these other things, that's just going to make things more complicated. For those of you that are still here, please think about reevaluating what that's going to look like for next year. Pay attention to what new forms are going to come out, how the forms are going to change and review, and please adjust your fees accordingly, and please let your clients know, start sending letters out that, because of the new things, if you have any of these items that you're claiming on your return, that your fees will increase. You should not be doing same old in terms of your fees. So and keep in mind that there are a lot of other additional services that many of us can provide on top of tax returns for 2018, for 2019, because of these stimulus checks. You also have, as I said earlier, the SBA. Many states are offering loans and grants that sometimes require tax returns, require personal financial statements, which technically personal financial statements, whether or not they make the rules a little more lax, technically personal financial statements, they usually want them certified by a CPA. That's typically not something that I do. I don't have the experience or knowledge. And could I get paid a lot of money? Yes. Could I learn it? Possibly. It's just not something that I really want to get into doing. Could I help somebody fill out an SBA application? Sure. Will I help them with their returns to do that? Yes. But just be, aware. There's a lot of, as Jason pointed out earlier, there's going to be a lot of planning opportunities for a lot of these things. You're going to have to sit and map out things, especially there's a couple of provisions that you don't have to pay the taxes until 2021, and then 2022, pay half then and half in the next year. So
Payroll.
you need to start talking with those things with your client and map those out, because if you don't, they're going to become a tax resolution client for you as well. And I try to avoid that. I mean, of course, do I like taking the money? Of course, but I'm looking and being an advocate for my client, and I'd rather not have that happen and cause the extra work, and then it sometimes can be an awkward situation in dealing with that.
That's a good phrase, being an advocate for your client. That's the outlook that you should have. There were several questions in relation to the deadline for filing returns to get the stimulus check. To my knowledge, the legislation does not include a deadline for receiving that. I don't know if the Treasury Department will insert one, but in terms of the legislation, I don't think there is one. I could be wrong on that. Again, I have not read all 880 pages yet. Dan, have you heard anything?
I haven't heard of anything, but keep in mind, you file a return, even if you e-file it today, it at best takes 2 weeks for it to get into the IRS's system before any other IRS employee or any other side of the IRS can even see it. So, keep in mind that if people want to do that, I mean, the Treasury Secretary said something about, checks starting to be issued on April 6th. Which is a little over a week away, week and a half away, and I honestly don't see it happening. I have many others that I've followed have been making the same comments that at best it's going to be late April to early May before these checks start going out. And I'd say checks, they're supposed to be direct deposited. And if they don't have direct deposited, here's where you get to, thumb your nose up at all those clients that haven't wanted to do their direct deposit information on their 1040 because they don't want the IRS to know their bank information. Well, here they could have gotten their check earlier, and then if they're, if they moved, they're not going to get a check. So that's why it's important that anybody who's changed an address, that you get that updated as quickly as possible, because a tax return and the 8822 are the only legal way to change the address with the IRS, although they change them a lot of times for many other reasons. It's the only legal way in which they can assert that they've given notice and things like that, for other things in terms of proper notification of the intent to levy and those types of things as well. Agreed.
So yeah, they got to have their 2018 filed. Several people also asked for reiteration on claim for refund. Again, for 2016 returns, not 17, 16, the April 15th refund deadline still applies. That is locked in by law, and that is not addressed.
I read that the IRS does have authority to extend that.
Okay.
But
they're not going to, though.
I seriously doubt it. It is something that we're requesting, at least again, the letter from the FICPA. We've seen the letter from the Texas CPA.
Yeah, Texas. Yeah, you sent me that.
That we're sending a letter to the IRS Commissioner and the Secretary of Treasury to, that was one of the requests, to try and get that extended. Along with a bunch of other things, things that, why the 1040 was extended, but gift tax and FBAR are now attached to the 1040 extension. So we're not given there. It specifically said in the frequently asked questions that estate and gift are not a part of that 7/15 extension deadline, and it makes no mention about FBAR. So my guess would be, well, it probably would go along more of the gift and estate. So my plan, again, we didn't get into asking the questions that you were asking me, but one of the things that I'm doing, again, tax season is business as usual. If their return is not going to be done by April 15th, I will be filing, and I say it this way, a paper extension, but I will be filing my, extensions electronically. And I will be filing on everybody that is still in here and not done by that deadline. It can't hurt anything other than, technically it extends the ACED statute by 6 months. It's better to do it that way than dealing with a bunch of notices on the other end, whether it's because the IRS system is screwed up or whatever. I just assume have that extension, even though I know that technically we've got an extra 3 months already. I mean, to me, it would have been made it easier if they'd have just extended everything 6 months. Then it would have just made it easy on everybody. Everything is extended 6 months, and anything due in that period of time, everything would be, would work out great. Because the IRS is, we all know that the IRS's technology is not up to snuff yet. They're still only 1 year into their 6-year plan to upgrade a lot of that. And it's just going to cause you more work later in regards to replying to notices and dealing with stuff. So again, tax season, I'm still doing extra hours. I'm still, trying to get as many returns done as I can as possible. Still trying to get the stuff in, and just know with the pressure off a little bit that, but I don't want to be working these kind of hours to July 15th, or nor do I want to be working a third tax season in the fact of working on it through April 15th. And usually we'd have a second one closer to September and October 15th. And I don't want to do another July one and then another September and October one. I love my family more than that.
I'm sorry, but I'm sitting here laughing because you said 1 year into the 6-year technology plan, and I'm laughing because, yeah, that was a plan that was originally initiated during the Reagan administration 30 years ago.
Well, I'm talking about the new commissioners.
I know.
Yeah, but yes, no. It's funny when I heard it. I mean, this was probably 7 years ago that at the time half the IRS was at Windows 7 at the time, and the other half was on Windows 98.
Right.
And the IRS, I believe there's still people on Windows 98, and Microsoft keeps it up just for them,
just for the IRS
with the security patches and everything.
Oh, geez. Okay. Boy. Sorry, I thought that was hilarious. Shauna wants to know any ideas on how to get transcripts if still waiting on the CAF unit. So, practitioner priority service as of this recording is closed. ACS is closed. The walk-in service centers, customer service desks are closed. There is no other way to get transcripts other than through TDS application inside eServices, which means that your POA or 8821 has to be on file with the CAF unit. Unfortunately, there is no other way. Those of you that use a third-party software tool, tax help software, Canopy, Pitbull, whatever, to pull transcripts, there's nothing they can do to accelerate that process. They're 100% reliant on the CAF unit processing your power of attorney and making that accessible through TDS because they're pulling transcripts through TDS. So there is zero way to accelerate that process as of this point. I'm heavily biased, but I think that the number one thing that the IRS can do is to open up somehow a satellite practitioner priority service thing, or maybe assign revenue officers to take those calls through their cell phones, like something. I don't know exactly what, but that would be my highest priority if I was the
that's, I mean, it's only, I mean, right as of right now, it's fax it to your normal CAF unit and wait. And like you said,
it's going to be 2 weeks.
About a week.
It's going to be 2.
It's going to take at least 2, if not longer.
Yeah.
And one of the things in our letter that we were going to send to the Treasury Secretary and the Commissioner was to accelerate the electronic filing of 2848s. That's another thing, especially since a lot of us are working virtually and electronically, because that's still not something that you can do. And the other aspect of it is that, where was I going to go with that? Anyway, just make sure that you're out there trying to do what you can. I use Canopy, and I was able to update my transcripts, so that was good news. But getting them on file, and obviously with nobody to call to get ones as they are today, that's going to obviously slow things down in terms of that. But it's just one of those. File it, check your services that you use, whether you go to e-services directly or using a other third-party service. This is the thing that I hated when they took away the ability for us to input the powers of attorney right away. And they've talked about trying to do something like that, and you really think about it, we were doing them a favor. And this wouldn't be a big a problem for us or for them, had we still had that ability to put in powers of attorney.
Right. Okay, Seth says address of a couple of my clients is old. They need to file 8822, Form 8822 to update the address, or file their 19 return as soon as possible. Misty wanted to know, what about people whose income is higher in 18 or 19 due to a one-time event, such as a capital gain event? They would be excluded from the check. Yes, it's my understanding that the checks will be based on AGI. And so, but like Dan said, it's actually should be based on their 2020 income. So if you're looking at a 2018 return that had a one-time capital gain event that impacted their AGI, then you need to file their 2019 return ASAP. Other than that, I don't think there's any way at this point to indicate to the IRS what the 2020 income needs to be or will be, so that
Right.
that it'll prompt the issuance of the check. Chances are that'll get settled out in 2021, and so for the time being, those people are probably hosed, as best I can tell.
Yeah, and obviously it's one of those things. Put the information out there as you find it available, and if that's the case, and if it's truly based on 2020 income, the unfortunate part is they won't get their money until probably next year. If it was a one-time event, I just had that question yesterday because I had an elderly woman who sold 2 rental properties, which took her over the threshold. Otherwise, normally she'd be in the threshold to get the full money. So I would err on the side of caution and just say, hey, you're not going to get it, and if they get it, great. But if you find out that it's truly based on 2020, there will be a truing up. Please make sure you start getting that out there as soon as possible. Put it in your newsletters, put it in your Facebook page, put it in an email. Just be aware that you're going to get inundated with just like those "Where's my refund? Where's my refund?" kind of questions. So and all of that takes time, whether it's you or your staff. And so the more you can get out there, the better. Just like we've said before multiple times, communication.
See, Ruth wants to know, will the stimulus money be applied to the balance due? It is my understanding that if a taxpayer has an existing balance due assessment, the stimulus check money will still be sent to the taxpayer. It will not be pinged against their liability to reduce the debt. They will get the check.
I read something else somewhere too, that there is no offset, and that would include even if they have student loans or alimony or anything else of that support. Nature. Yeah, so
court
order type things. Yeah, so they should still get that money. That should bypass that. However,
the money is meant to pay for food and rent. That's what it's for.
Right. However, that doesn't mean that the system is going to work 100% correctly. So just be aware and be prepared. And, obviously it'll be things that we'll have to follow up in further communication with you guys, but there could be things that we'll find out later that will, how do you fix that if they didn't get it? More than likely, it's just going to be filing a 2020 return. That's the only way you're going to get it fixed.
Definitely. Byron says, tagline I am working on, are you SBA ready? Love that. That's good. That's good. James said, oh man. James says, Jason, you definitely put the fun in funeral. Ouch. Sarah left right at 11 o'clock. That was like an hour ago. Says, separate webinar, please. I assume she was referencing the marketing stuff. Let's see. Aaron says, can a business with a pending offer still defer the employer portion of payroll without jeopardizing the OIC? Again, it is not yet law. The president has not signed it. But Aaron or Aaron Golding, I believe that the answer is yes. My understanding, again, I have not yet read and digested all 880 pages of this piece of legislation, but my understanding at this point is that the payroll tax deferral, because of the fact that it will now be statutory, applies to everybody and anybody regardless of circumstances. And so no, I don't see it having any impact on a pending resolution proposal. Mary asks, any suggestions on how to submit an IA if you're unable to use the .gov? Director says to fax if possible, but don't have any numbers for that. So Mary, and I know you sent me an email about this as well. So let's see, 2 hours and 10 minutes into the webinar is where I need to email you back and say, go there. The ACS fax numbers, they are buried on the irs.gov website. You can find them. They do change occasionally. So get your Google on and you can find those. A recent notice to the taxpayer from ACS, a recent bill or reminder of the BAL due, that will also most likely contain a current fax number. But better yet, certified mail return receipt. The IRS is not currently processing mail. There's a huge slowdown in that. But if you send something certified mail return receipt, it's timestamped, they'll still receive it. It'll go into a giant bin, hopefully not a shredder, and they will process those as they can. It only makes sense that the IRS will have some latitude in those. So the fax numbers, again, Google for those. They're on the IRS website, buried very, very deep. But also certified mail return receipt is your friend. Fax and certified mail return receipt, that's how I did everything when I was operating my practice from overseas. So I didn't use the OPA. I didn't call ACS. I refused to call ACS. So default to those remote practice practices. Claudia is asking about FTB. I am blissfully and intentionally ignorant about anything that happens within California's 3 ridiculous taxing authorities, way beyond the scope of this presentation. So I'll refer you to the FTB. I know Cal CPA and Cal SEA both are very active in this arena, so I would check with them and see if they have any guidance on California issues. Barbara, to my knowledge, the CLU is I have not checked the phone line. I have no intention of adding that to my daily checking rotation. But because of the suspension of lien filings, I would not be surprised if the CLU folks are not in the office. Treasury offset, we already talked about that. IA does not extend CSED other than the 30-day pending period. Dan, Richard has a question there about a Florida issue. I'll defer that to you since you're in Florida. Stephen wants to know, I have an employee where all she does is resolve cases through ACS. Is there any way for her to continue her job? Yeah, Stephen, like I just said, when I was in practice, I flat out refused to talk to ACS. I didn't want to wait on hold. I didn't want to deal with the frustration of having the conversations with those call center people that you know, all they really knew how to do was read their script and operate their computer in front of them. I just find that very frustrating. Personally, I have a pretty low frustration threshold for certain things, and so I refused to engage with ACS. So if you have an ACS resolution admin person, that's or EA or CPA, whatever, or young attorney, whatever, then that's what they do. Then yeah, they need to become very, very familiar with a device called a printer and another different federal agency called the United States Postal Service. And they can continue their job that way. If they do not have a fax machine or you don't have some sort of eFax style thing set up, I use HelloFax, I've used MyFax, eFax, other services in the past, get them set up with that and go digging for like I mentioned, those buried ACS fax numbers. But fax and mail are your two friends. You'll still get stuff in. They will still be time stamped. Okay, the time stamping is the most important component because then you can obviously say, yep, I sent it in. Just because you didn't have anybody at home or you didn't have anybody opening the mail ain't my problem. So that's what that person does. They become a fax and postal service junkie. Maybe I shouldn't say junkie in correlation to my earlier cocaine jokes. Let's see, non-filing Schedule C. And by the way, Dan, if you have other client work or whatever you got to do, that's fine. I am committing to staying here until we are done with this backlog of questions.
We're getting there.
Let's see. So non-filing Schedule C, don't file mostly because of SE tax. That's pretty common. This is from Ken O'Hare. So filing gets you stimulus, but then you owe the back SE tax, so it might be a wash, just a practical item from a client's perspective. So Ken, this is where under Circular 230, I am obligated to remind you that you are obligated to remind your clients of their filing and payment requirements. Whether they comply or not is completely up to them. But we have a Circular 230 obligation to inform our clients that they need to file, they need to pay their SE tax anyway. And so that is what it is. I am summarily rejecting the basis of your argument. We have that ethical and Circular 230 obligation to at least inform our clients of their obligations. If they don't want to comply, then fine, they're not going to get their stimulus check. And quite frankly, that's a person that shouldn't be your client. And I say that very matter-of-factly without pulling any punches whatsoever. Robert. Oh, why didn't I think of this? Robert, thank you. you can just have the bank issue a stop payment against the IRS direct debit. Huh. Totally forgot about that.
Right. Other than there's a fee with that, but
Yeah, probably what, 20, 30 bucks, probably.
right.
You know, for somebody that can't pay their rent or their mortgage this month, and their IA payment might be $500, that $25 fee for a stop payment's probably worth paying so they can put
Right.
food on the table. So,
Right.
And the IRS isn't going to penalize them for it either. That's the other side of that coin. So it's probably 25 bucks well spent or whatever it is. For those of you asking about the replay, yes, I will be posting this entire video. Corny coronavirus jokes, cocaine jokes, New York jokes, everything, all included for your entertainment. That will be posted on, for you that are Academy members, I will put it up in the video vault. And I will also put it on, what's the website? IRSpeoplefirst.com for the public. Let's see. Claudia says that she saw something saying they will not run the auto pay on IAs from April 1 to July 15th. I have not seen that. So thank you, Claudia. I will look for that. If it was sent out, then I missed it in the fluster of confusion trying to finish up this presentation before we got done. Robert says, my new units will be painted for free. Oh, the stimulus check? Yeah, I remember you're doing a development. I assume that's what you're referring to. Carlos says, feel you lost our 15-year girl couple months ago. What?
Probably related to the dog comment I made.
Oh, yes. Oh, man, sorry.
So Carlos lost a puppy as well. So
sorry, bro.
Yeah, we can all feel that. I know Jason lost yours, what, 2 years ago now?
2 years, and that I was not well, so I can only imagine what you guys are going through.
Right.
Seth, no, it's only 1 hour of CPE. For the 1/4 of you that are still here, I assume you've either walked away and left your computer on, or you're paying attention, one of the two.
I mean, hopefully this information has been helpful for everybody, and
Yeah.
Getting some information out there. Hopefully we've given you some extra stuff, a few things in terms of marketing and practice management type things as well. But yeah, we definitely should have made this a 2-hour CPE.
Let's see, James, yes, they get to spread the payroll tax for 2020 over 2 years. That is part of the legislation. So half next year, half the following year. The 401k thing. So Stephen and Nicole, the part of the CARES Act is that up to $100,000 can be withdrawn from a 401k without paying the 10% early withdrawal penalty. Regular income tax will still apply, and like Dan mentioned earlier, it may bump the person in a tax bracket, so it does have far-ranging tax planning implications.
Right.
Let's see. Carlos says he just had one of his biggest months ever. I am not surprised. All of you can actually be doing the same thing. Again, don't be greedy. Don't be profiteering. Don't become a scumbag. Don't make me yell at you. But there is money on the table. There is money floating out there for client work, even if you have to accept some sort of deferred compensation arrangement. And I don't mean that from the tax definition of deferred compensation. take your fee later, like Dan was talking about like 2 hours ago. Definitely, there's an opportunity to help your fellow humankind, and this is a recession-proof industry. We are very, very blessed, and I do not use that word very often, but we are blessed to be in an occupation where, quite frankly, we don't really have to worry about our income source compared to people in a lot of other industries. So hopefully you are grateful and thankful for that career choice you have made. Ken, yes, Social Security databases will be used for stimulus check purposes. Karen says VA benefits as well. That is a new one to me. I haven't heard that one. So if they use VA benefits as well to send stimulus checks, that would be great for veterans. That'd be great if they do that. Let's see, I already talked about the payroll tax deferral. So Vicky says she just got an email saying that the CAF unit will shut down today. Crap. So if that, I need to verify that, but if that's occurring, then that happened while we were in the process of doing this broadcast. So thank you, Vicky. I'll be on the lookout for that. That will seriously suck.
Yeah, I haven't seen anything about it.
That's really not good. I mean, that's like significant suckage for all of us. But right. You know what? We do what we can. With the power of attorney in hand, even if you can't file it, you can't pull transcripts, you can still act on behalf of your client. You can still fax and mail things into the IRS. Just be sure to, you'll always need to include a copy of the POA because they won't be able to pull it up on the CAF unit. But you can still act on behalf of your client. Robert says, is this going to run into Monday's office hours? There is no office hours on Monday because next Monday is the end of the month. We get a 5-week month. So next office hours is April 6th. So no, we're not going to talk here for all day. No, we can't.
Right. I was going to say that to all our members that are still here. We are not having the call. It'll be on the 6th.
Correct. How are we going to pay on behalf of clients by July 15th? There's no form to go with this. How do we pay on their behalf without an official form? Same way I do installment agreements. I've never, ever, and never will use Form 9465 for an installment agreement. Use a cover letter. You don't need a form for everything. Just use a cover letter saying apply this payment to blah, 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 period, for this taxpayer, this TIN, etc. Write something to that effect also that you can squeeze into the memo line of the check. Anthony, yes, the revenue officers, PPS, ACS personnel, yes, they all do forward your power of attorney to the CAF unit. But if those units are not operating, then they're not doing anything.
Right, and they don't enter them in.
No. CAF unit does that.
They don't enter them in any way that anybody else can see it anyway.
Yeah. David says the taxpayer should be able to access the information on their own account. You can assist the taxpayer in the office, pull transcripts that are needed. Yes, the two things there, David, that is a good point. The very few people have their individual irs.gov accounts set up. I mean, I do, all of you do, I hope. But one of the challenges with setting up those things is the identity verification, which is a roadblock on purpose, and it's a good thing. But there have been issues in the past. TIGTA did a report on this probably a year or two ago, saying that the IRS the information that they pull from the credit bureau, and I can't remember if it's either Equifax or Experian. I think it's Experian, I think, but don't quote me on that. It's one of the two. You know, if a taxpayer has their a freeze on their credit report, then the authentication will fail. If the information on their credit report is inaccurate, the authentication will fail. And we all know that over a third of credit reports have inaccuracies. I mean, heck, I recently myself, I watch my credit reports like a hawk. You know, it's just part of being a real estate investor and using my credit. I have to watch it closely. And so I tried to put a freeze back onto one of my credit reports, and I failed the identity verification. The verification questions they asked me, I know for a fact I answered them correctly, and they even matched that particular credit report because I had the damn credit report in my hand, and it still said that I didn't answer my own questions properly. And so this has been an issue with the IRS system as well. And quite frankly, if people aren't there at the IRS that we can call to check up on this stuff, it's going to be a further issue. So I think that if people want to sign up for those accounts, the personal accounts, to access their own transcripts, I could be wrong, but I think there's going to be problems with that too. But if they already have the account, then David, yes, that is great advice. So add this to your checklist. Ask your client, have they already created their irs.gov account so they can pull their own transcripts? Okay, that is a great question to add to your checklist. Oh, we're almost there.
Yep.
Let's see. Ruth, great, thank you. Aaron, thank you, I appreciate that. All right, for the 35 of you still left, what time is it?
Almost 3:30.
Wow. Thank you for sticking around, everybody. Let's go ahead and rope this off now. This was supposed to be a 50-minute webinar, and we're now 2.5 hours in. So I hope that this was helpful. You know what, Charles? I'm going to answer that question. What else would I be doing? All right. There's plenty else that you should be doing instead of sitting here listening to me ramble on, telling bad, corny jokes. You should be doing like what Dan said earlier. Even though there's the July 15th filing extension, you should act as if, okay? And enforce to your clients that are able to do so, enforce the April 15th deadline. That way, you don't get locked into a never-ending cycle of suckage as this problem continues to delay out, because it might. We don't know what's going to happen, okay? So you should all be acting as if April 15th is still April 15th, especially prioritizing those people that need their return filed in order to get the stimulus check, prioritizing those people that are going to get a refund. They need that refund money to like pay rent and put food on the table. You know, especially those EIC and CTC folks. You know, the lower income population, they're the ones most deeply impacted by all of this. All right. So get those returns done so they get their refunds. Prioritize, basically, you know what, triage is a good word. You know, even though we're hearing that word in relation to hospitals right now, triage is what you should be doing on your clients. Okay. So
you got to fix those wounds.
Get those returns done. People with delinquent returns, you know, those are probably next in priority. And don't neglect your marketing. All right. I know that we're going into a recession. I know that things are looking very, very bleak. I know that there may be some of you on this webinar that have lost a six-figure sum of money in your retirement accounts. Okay? I recognize that. I think it was Warren Buffett that said, be greedy when others are fearful and fearful when others are greedy. That quote is in reference to stock market investing. And don't take advantage of people. Don't become a scumbag. Don't be greedy, but operate your business. All right. Like I said earlier, we're in a recession-proof industry, that you should still be operating your business. And guess what? People need you. They need those returns filed so they can get their stimulus check, or to get for their SBA loan application, or simply to resolve a years old tax debt. Now is a time for them to hire you, so that you can resolve that debt. Do not neglect your marketing communications. Okay. Anybody that comes to me 6 months from now saying, I missed the boat, what can I do now? I'm going to tell you, too bad, so sad, you missed the boat. Okay. You got to be doing your marketing now. If you're not doing marketing now for resolution, planning, prep, advisory, financial planning, I have been debating for 2 years now, 2 years of starting a registered investment advisory practice. Okay. I took the Series 65 exam last year for that purpose. Okay. There's never, ever, 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 I won't say never, there hasn't been a better time since like 1930 to start a financial planning practice. All right. So, because people are freaking out, they need that service. So, tax, finance, all this stuff, people need your help. All right. But they can't find you if you're not communicating to them and raising your hand and pushing through the noise and letting them know that you're here. You have to do your marketing. Okay. And again, don't be greedy, don't be a profiteer, but at the same time, if you're not doing something to position yourself as a go-to resource for all of this, you're shooting yourself in the foot. Okay. So, Dan, any comments on that?
No, I think it's, you're just talking about going after, the marketing, and, we always talk about the, 90-day lead time most marketing takes. And, it takes a while to get that engine going. And most people that I've ever heard, when they stop it, it takes time to get it back going.
Mm-hmm.
And, there is an opportunity. It's hard to say this in a way that where it doesn't sound greedy, but we got to take the opportunity that there is going to be times where, again, you get to choose how you want to handle things. It's your practice. For most of you here, you get to determine what you want to bill. You get to determine whether you want to do something for free. And hopefully you all know the true value of what you're really worth. Most practitioners don't, and they way undercharge. I'm still, I know, undercharging for things, and I know, Jason, you've told me that before. But I'm still charging more than the average, well more than the average tax practitioner in terms of a lot of the services that I do. But again, that doesn't happen by not doing the marketing. So, I did a webinar last week to my local real estate association. We were talking about niching. I did a webinar on becoming an S corporation, sent an email blast because I'm an associate member, and I sent an email blast to the 4,300 members, which I'm allowed to do twice a month for free, and it's $20 after that. And so I actually had scheduled through July, I'd scheduled a bunch of live seminars there, which I've now, obviously, for the near future, converting any of those that I have to webinars. But that's okay, because again, in the category of working smarter, not harder, some of those webinars will be turned into transcripts, which will turn into books or special reports or blog posts or anything else that I can reuse. I could even turn it into into a like a podcast or anything else of that nature. I can put it on my website and make it something that I tell my clients to see before they come into me. So, there's a lot of ways that you can, you need to think strategically in terms of creating your marketing, what it, where you're going to put this out there, where you're going to reuse this, repurpose it. Even if you put together a series of blog posts, you put a series of blog posts and that can become a small book. And if you have it on a specific topic and you map it out, those are things that you need to do in terms of your marketing. Networking, we all know how to do that. Some of us are better than others. But if you can do and create a book and use that as your new business card, that's the thing that we harp on a lot. And that's especially in 2020, that's what we're harping on our members. And we've got a few more members that have gotten a book now earlier this year because of the push and the programs that we have in regards to that. Some of the templates that we put together for them to be able to do that. And, again, trying to make it easier, trying to make it happen, because nothing's going to set you apart from your competition better than something like that. I mean, we still, to this day, the people who are on TV, the people who who write a book, the people who have a podcast, we still put these people on a certain pedestal out there just because they have that. And it boggles my mind when I tell people I have a book and how they look at me differently just because of that.
Right. I mean, don't forget, we elected a guy to the presidency because he was on a TV show, and he got the TV show because he wrote a book that he didn't even write. Okay. So, I mean, the power of a book is huge. And Charles, I don't mean to throw you under the bus here, but I'm going to at least push you in front of it. He says, this is better than TV. I'm stuck at home and can't do anything with taxes right now. Wrong, 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 wrong. Even if the IRS disconnects the phone lines, doesn't answer the mail, like I mentioned earlier, you need to prepare returns. You need to do bookkeeping. You need to
learn about SBA rules and state rules in regards to that.
Exactly.
Just
I totally forgot about that. Charles, you're in freaking California. The fifth largest economy on the planet. I mean, come on, man.
880-page tax law you could learn.
There is so much you can do with your clients. They have FTB problems. They have, I can't remember the other two. But you have 3 taxing authorities in California that you got to deal with. I mean, you don't need to leave your state. You don't need to care what the IRS is doing. You have state crap you need to deal with because California is difficult to deal with, right? I mean, everybody knows that, especially those of you that live in California and have to deal with it. There's plenty that so look to the state first. You need to resolve the state tax debts first anyway, before you should even talk to the IRS. I'm sure the state of California is still filing liens. I'm sure that there are that the SBA emergency loan funds, they're dispersed based on I would imagine census data or something. And guess what? California has a giant population last time I heard. So they should be getting tons of this, stimulus money and loan funds. Like, there is so much that you can do in California that what's going on at the federal level, you really don't even need to really pay attention to it for at least for the next 3 or 4 months, right? So just look at those. The media opportunities, the writing opportunities, write a book, speaking via webinar. Charles, I could be wrong on this, but I think you're an EA. So if you're not involved with the California Society of Enrolled Agents, why not? Cal SEA is the only state EA, state level EA society in the country that has active local chapters. There's a San Diego or SoCal something chapter, right? And guess what? They're not doing their lunch and learns right now. They can't. They're prohibited. They can't do their dinner seminars every month. Why are you not reaching out to them and saying, hey, let's do a CE thing. I have a Zoom account. Let's get on. We'll talk about what's going on at the IRS. You can basically regurgitate what Dan and I just spent 3 hours talking about. And Cal SEA can issue the CE. And then, hey, guess what? Those people are going to have questions. They're going to want to talk to you. They're going to give you referrals. Okay. That's what you can be doing. There is plenty for you to be doing. Right now, granted, this was already in the works and I'm 2 months behind on it, but I'm launching a new book next month. I am launching a new website, again, 2 years behind schedule, but I'm finally launching a website for tax professionals. It's kind of like a Yelp knockoff, basically. I hired a SEO firm yesterday to help with the marketing of that, and I'm launching that next week. Yes, the economy is slowing down, okay, but those of us that are business owners, there's still things we can be doing. And if you're not doing those things, then, or if you're the kind of person that is just going to rest on your laurels and panic and hide in the bunker, then I don't know what to tell you. I can't help you. But if you're the kind of person that sees the opportunity, you're more of the okay, what can I do kind of thinker, then we can have a conversation, right? And yeah, I mean, there's so much that you can do. And I'll get off my soapbox now.
Okay,
now that
well,
we're at the almost 3 hours.
yeah, we still got a little over a quarter of the people out there. So
Dan, do you just want to make it 3 hours even? You want to do that?
Oh, at this point, I'm sure me and everybody else would like to go. Most of what's left are our members, or at least the diehards anyway.
Yeah.
But I think in summary, I think there's an opportunity that's being presented to us. Obviously, I mean, we can. Jason will harp on, the robots coming and doing those types of things. And this just goes to reiterate that still will happen and is still coming. But because of things like this, the coronavirus pandemic, and everything, the fallout financially because of this, because of the market, because of the IRS and the government, the stimulus, the credits, all of these things, the tax planning opportunities, the financial planning opportunities, you should be turning your practice into a consulting base type of practice.
Bingo.
As well as, I mean, even from the representation that's still consultative. So whether you do exam representation, collections representation, or both, that the tax practice should be starting to, if you go the way of somebody like Carlos, who has, put the tax practice of, behind him. His last tax season was last year. I mean, he's got some other consulting things that he does on top of tax resolution, but he's been knocking it out of the park. Took a look at your website, Carlos, and that looks pretty cool. I like that. So, things like that, doesn't mean you can't still have a tax practice and still do that, but it should start being your side income and not your main income.
Right.
Because
it's like this SBA loan thing, right? So SBA loan consulting and accounting, that's been around for decades. It is not a new thing.
right.
Nobody, not myself, not any of the other, talking heads out there. None of us created this. It's been around for eons. But because of the current situation, it's bubbled up to the surface. And now for thousands and thousands and thousands of accountants out there, it's this brand new thing they've never heard of. Okay. It's not new. It's been around for decades.
Right.
But there's more need for it now. It's at the forefront. More people are aware of these loans. Like the SBA disaster loan program is not new. But it's an opportunity. And I mean, maybe I'm being too optimistic here or whatever, but I don't know. I think you owe a duty to your community to help these small businesses stay afloat, right? I mean, that's my attitude. And if it just so happens that you can collect a fee out of it for providing an honest day's work, then why not? You need to get paid too.
Right. So anyway, I just think that, appreciate you guys being here. Hopefully you got some good information out of this. Jason, thank you for putting that all together in terms of the technical side of it. And just stay tuned to, like Jason said, when we first started almost 3 hours ago, that there will be some follow-up email or webinars to this over the coming weeks. I would almost probably say that we could easily be doing almost one a week through April, giving updates, giving you new ideas, breaking
out.
out
Do this every day, Dan.
Yeah. Well, we could almost do that, yeah. But I mean, in terms of some of this, how to take advantage and some of the things you should be doing from a marketing perspective, things that you should be thinking from a practice management perspective. I've been doing a series in practice management. I've done the billing, I've done client acceptance, I've done collections. I'll be doing some on succession planning, on some employee aspects of hiring and firing. Performance reviews. I'll be talking about a lot of those different aspects as well over the coming weeks, months, because all of that is important. You need to have that all as part. I mean, it's the unfortunate part of being a business owner that most of us that are here are, that understanding that, to run a successful tax practice, and I'm learning a lot more things in terms of how to do that in terms of automation. And I will be, I'll be sharing some of those tools, hopefully coming soon, things I haven't talked to you about, Jason, the things that I finally got into using my Confusionsoft a lot more.
Really?
Actually,
I look forward to hearing that.
I've hired a consultant to help me with some of it.
Good.
So that, building out some of this automation for welcoming new clients and following up on prospects and creating drip campaigns. And so I will be putting some of all of that together to be able to share with other practitioners there on future webinars and with the future coaching mastermind stuff that I will be doing as well. And that is coming soon. Hopefully no later than late May to early June, if not sooner.